Hello, in today's video we are going to learn what is cryptocurrency in the simplest language. In prehistoric times, people used to exchange goods called the barter system. Now the barter system has some flaws. Let's say there arises a situation where a caveman is exchanging 7 apples and getting 7 oranges in return. The barter system fell out of use because it has some big flaws. These flaws includes people having requirements that coincide. For example, let's say you have 5 apples and your friend have 5 oranges. You want some of his oranges. This would only work if your friend has a requirement for that apples. Otherwise, he'll not be ready to make an exchange for it. There was no such common measure of value of a commodity that could be expressed. There's a problem when you have to decide how many apples you are ready to trade for one orange. Similarly, you can't divide an alive animal into different smaller units in order to make exchange for it. The goods cannot be transported or carried easily with you, unlike our modern currency, which fits in your wallet or even mobile phone. The goods that you own cannot be taken with you everywhere you go. After realizing the barter system had major flaws, currency went through few iterations. An official currency was minted consisting of gold or silver coins. They were first introduced and used across Europe from 1680s. Now, even carrying the coins was difficult, so governments started the concept of banks, in which people used to deposit their gold or coins and get a receipt for that deposit. This receipt was known as the government bonds or simply bonds. Later this became more popular and even easy to carry, and therefore a standard paper currency was introduced, with standard denominations backed by gold or precious metals in the reserve banks. Paper currency gained widespread popularity and was used all across the world, even till today. This is how our modern currency as we know came into existence. Modern currency included paper currency, coins, credit cards, and digital wallets like Apple Pay, Amazon Pay, PayPal, and so on. All of this was controlled by banks and governments. This centralized system has some flaws in the modern world. Imagine the scenario of doing an online transaction in which you are thanking your friend for paying your lunch, and you are saying that you are sending money to their account. Now, this transaction fails due to a technical issue at the bank. For example, the systems or the machines weren't working properly, so this means that there is a center point of failure, which is the bank. The user's account could have gotten hacked. For example, they could have been a theft of identity, or the transfer limits of the account were exceeded for international remittance market limitations. Sending remittance from one country to another may have centralized limitations, or sending remittance can be costly and time consuming as it involves many third parties in between the sender and the receiver, causing a lot of hassle to both the parties. This problem can be resolved with cryptocurrency, as crypto transactions are based on blockchains, unlike banks that have off during weekends or remittance sending offices that have a lot of fees and timing restrictions. Crypto blockchains are online 24/7 and serve as direct transaction network from person A's wallet to person B's wallet without any third party in between. It does not matter what time it would be, it wouldn't matter how much amount, or even it wouldn't matter what is the location of the person. This in turn removes the problem of modern banking. There are no limits to the funds you can transfer. Your accounts cannot be hacked unless there is a center point of failure or mistake of user, such as compromised device, as there is no third party in between when using wallets and simple peer-to-peer transfer mechanism. Cryptocurrency is a digital or virtual currency that is meant to be medium of exchange or store of value. Cryptocurrency is quite similar to the real world currency, just that it does not have a physical form. It uses cryptography or encryption to work for the way it does. Some of the features of cryptocurrencies are that there is a limit to how many units of that particular currency can exist. For instance, the biggest and oldest cryptocurrency, Bitcoin, has a limit of 21 million Bitcoins. So this can be and has been used as a safe haven investment in the year's perspective in ignoring day-to-day market volatility. As one thing for the fact we know that no matter how unlimited the world currencies, for instance dollars, can be printed by the US Fed, causing the people having dollars lose its value over time due to this inflation and increase in supply of currency. Another feature of cryptocurrencies is that their transparency and traceability. In simple words, you can easily verify or trace the transfer of funds using blockchain explorers. Blockchain is secured by miners. Miners are the network of computers that process transactions and keeping record of transactions occurring. Basically, there are the ledgers. The more number of miners in a cryptocurrency, the more will be computational power and the stronger and secure the blockchain will be. Cryptocurrency transfers are independent of a bank or a central authority. The basic idea behind cryptocurrencies is that they should work in a decentralized manner without any central authority. Changes or upgrades are done in a blockchain using consensus voting system, i.e., the tokens holders or the miners. New units can be added only after certain conditions are met. For example, for Bitcoin cryptocurrency, the miners are rewarded with Bitcoins after they mine or add a block to the blockchain. Another big use case for cryptocurrency which makes it special is that there is little to no transaction cost to send from your wallet to another person's wallet. The global remittance market was valued at $701 billion in just 2020. Just imagine how much money these parties make when the laborers working in developed countries send money to their home countries. Usually the transaction costs around 3 to 6% of the sending amount, and on top of that, it takes a lot of time to send. The remittance via third party also sometimes has restrictions to many countries. For example, countries like Pakistan, which is a home to almost 10 to 15% of the freelancers from the world, yet they don't have any payment options like PayPal, Apple Pay, Amazon or Cash App. On the other hand, cryptocurrencies not only resolve this border gap between the sender and receiver's country, but it also removes the third party, cutting a hefty percentage from the money and costing a lot of money to the sender. The most recent example of how useful cryptocurrencies can be seen from the Ukraine situation. Many countries donated a lot of money via cryptocurrencies. Now try thinking of doing this via gold or even banks these days. You lose some amount of money you have while using banks, and neither there is 24/7 access to your money via banks. You can't just walk up to your bank at 3 am in the morning and say that you want to withdraw some money. And on top of this, there are literally no limits on purchases and transfer amount using cryptocurrency. For setting up an account in bank, you need to do some amount of paperwork and documentation. However, with cryptocurrencies, all of this can be avoided. All you need to do is create a private wallet and securely save the private key with yourself. It's basically the password to access your personal wallet and funds, and it must not be shared with anyone. While public keys can be shared with others, as it is the address where the sender will have to send the amount, international transactions are faster than the wire transfers take place, as mostly they take place about half a day to transfer from one place to another, but with cryptocurrencies it takes only matter of seconds. However, there are daily new developments being deployed in the world of Web 3.0 using cryptocurrencies, and more real-world use cases are going to be introduced in the world of decentralized finance, or the short form DeFi. If you liked the content, please hit the like and subscribe to the channel. Thank you for watching. Bye bye.